Hey, and welcome back, traders, to Small Caps and Small Accounts for Big Wins. I'm Susie, and today we're diving deep into something that is crucial if you're trading low float stocks. With floats of under 25 million shares available in the float, we're going to be talking about how large cap earnings season affects momentum in small cap trading, and more importantly, how you can adjust your strategy to stay consistently profitable during earnings season. If you've been scalping your way through choppy markets in this earnings season, but want to shift more towards trend trading for bigger wins, this video is for you. Plus, stick around because I'll be sharing with you a step-by-step trading strategy specifically for small account trading, but it also works for larger accounts as well. We're going to be talking setups, entries, exits, and how to avoid getting caught in a momentum slowdown, which always happens during earnings season. First, let's talk about how large cap earnings season can feel like hitting a brick wall for small cap momentum traders. Earnings season in the stock market happens 4 times a year. Each season lasts 6 to 8 weeks, and here are the most active periods for each reporting season. During earnings season, all eyes turn to major players. Companies like Apple, Microsoft, Tesla, you name it. These big names dominate the headlines. And as a result, retail traders and institutional money shift their focus and capital away from speculative plays like small cap stocks and low float stocks. Without that high volume of traders piling into low float stocks, the momentum dries up a little bit. And if you've ever noticed fewer big breakouts or slower price action during earnings season, that's why. Another reason? Broader market volatility. When large cap stocks report earnings, it can shake up the entire market, especially if there's a big surprise like missed earnings or lowered guidance. This uncertainty makes traders more cautious, which directly affects small cap momentum. Now, this doesn't mean that you should avoid trading during earnings season. It just means you need to be more selective. Here are a few indicators that can help you find the best plays and avoid the dead zones. Float and relative volume. Look for stocks with floats under 25 million and at least 3 times the relative volume compared to their average. Volume is your best friend in a slow market. Pre-market gappers. Focus on stocks that are already showing significant movement in pre-market. These are more likely to attract attention once the market opens. Sector strength. Pay attention to sectors that are hot. Even during earnings season, certain sectors like biotech or energy can remain strong while others cool off. Most importantly, keep an eye on the overall market sentiment. If the S&P 500 or NASDAQ is taking a beating, small caps are often affected too. Now let's pivot on strategy. A lot of you have been asking how to transition from scalping to trend trading, especially if you have a small account. Scalping is great for quick wins, but it often challenges traders when trying to build consistent profits due to the constant pressure and stress of managing so many micro trades and the difficulty in capturing larger moves. Trend trading, on the other hand, can give you bigger profits by riding longer moves. Now, here's the strategy that I recommend for trading low float stocks during earnings season. First, find the right setup. That involves looking for stocks breaking out of consolidation or forming clean patterns like range trades, reversals, continuation, and bouncing off support. Next, wait for confirmation. Don't just buy the first green candle. Wait for volume to confirm the breakout. Next, use EMAs. They are your best friends for riding trends. Enter on the pullback to the 9 EMA or the 34 EMA and hold as long as the stock stays above it. Set a clear stop loss. Protect your small account by keeping your losses small. I usually set my stop just below the previous support SMART target or the most relevant EMA based on risk and reward. My rule is never risk more than 1 or 2% of the leveraged capital and Only take the trade if your reward is at least 3 times your risk. Take partial profits. Lock in gains along the way, especially if you're trading in a slower market during earnings season. You can always re-enter if the trend continues. Guys, right now we're smack dab in the middle of earnings season. This is quarter 4 of 2024 earnings season. And I know most of you have noticed a lag in the overall market and momentum. So let me show you a real example of how my members in the Momentum Stock Traders Pro Trader group base our earnings season strategy for day trading. This is today's trade on TNXP. And the float reporting from the most reliable sources was very mixed and a little bit confusing, but FinViz showed it under 25 million. And this is a stock that I am familiar with. I've worked with it many times over the years, so I am comfortable with how it moves. Our AI momentum alert, it flagged TNXP at 7:08 a.m. Mountain Time in our Discord group with these critical levels to trade off of. At the alert, it was just a matter of waiting for the volume to pour in at this $13.75 smart money institutional level, which our Discord alert gave us. And at 7:34 a.m., we saw the volume shift and the trade signal, which is this arrow, where it more than doubled from that 1 minute candle to the next one. And on the candle that I entered on, volume went up by 3 times, right at our smart institutional level that our Discord channel alerted us to. And our strategy is very different from other traders out there because our strategy is all about aligning our positions with the institutions. We base everything on what the institutions are doing and where they take their positions. Our Discord alert gives us all the institutional levels, as well as the algo on our chart gives us these levels too. These white horizontal lines are where the institutions take their positions. So when we get a buy arrow at these levels, that's our signal to enter the trade. My entry was at $13.90. My stop loss was just below the institutional level of $13.75. And my initial target was $16.25. But I would be looking for trend follow through yesterday's high of $17.32. My risk was only 15 cents. My reward was $3.42 per share, which is well over 3 times my risk. So yes, this is absolutely a trade we took. Now, normally I use the 34 EMA as my trailing stop along the trend, but in this case, on this first pullback, price was very clearly using the 9 EMA as support along the trend up. So in a case like this, it makes perfect sense to use the 9 EMA instead of the 34 EMA as my trailing stop, and stay with the trade to my high target of $17.32, as long as price holds the 9 EMA and as long as volume confirms this decision. Now let's stop here for just a minute and talk about volume, because it is such an underrated indicator. And I really zero in on guiding my group of traders on how to read volume in their trading to increase win rates dramatically. In a nutshell, what I teach them is when it comes to volume, we buy on increasing volume, at least 2 times higher than the previous seller volume. And when it comes to pullbacks, we look for less seller volume than the previous buyer volume has been. So that's what I saw here on this first pullback to the 9 EMA. Buyer volume here was over 240,000 buyers on this candle. Seller volume here was less than 20,000. That's a continuation setup, friends. So if you missed the initial entry, here's your next entry at $14.58, and use this 9 EMA as your stop loss. Here, as price reached my initial target, which is an institutional level, my job here, right at this level, is to expect a pullback to the 9 EMA, which is basically a bull flag, okay? And again, watching that seller volume, which needs to stay low and hold the 9 EMA. And it did. Again, another continuation signal telling me to stay in the trade to my higher target, and price reached my $17.32 target on strength and increasing volume through the target. But I sold right there because here's the thing, guys. Yesterday's high, which was $17.32, is a level that will 100% need to be proven as support in order for any continuation. So knowing that, I sold all my shares right there. If it happens to set up again for another trade, well, I'd take it. But this was an earnings report move. Trading earnings reports, you will see institutions take profits at the high. So you have to trade exactly like they trade. And this is the strategy that we're using during earnings season. It's keeping us very profitable, even though momentum across these small caps seems to be somewhat weak, but we're profiting every single day. This little trade paid us almost 26% profit, very smoothly and very cleanly. The key was patience and waiting for the volume to confirm exactly at these institutional levels that our Discord alert gives us. It's tempting to jump in too early, especially if you're used to scalping, but waiting for confirmation is the difference between a winning trend trade and a false breakout. One last thing, guys, if you're trading a small account, use a trade planner. I developed this one for my members based on their available capital. They can see in advance if a trade will be favorable and worth trading or not. In the case of TNXP, if you're trading a small $1,000 account and your entry was $13.90, the planner tells you to trade 71 shares, only risk 14 cents, and shows your profit will be favorable. And in the case of TNXP, it shows your profit for this trade will be $3.43 per share and $242.82 total profit. And this trade only took 30 minutes. It's an excellent income for just 30 minutes. So here's my 3 golden rules for small accounts. Quality over quantity. Focus on these A+ setups that I show you here. Don't waste your buying power on mediocre plays. Risk small, win big. Aim for trades with a 3-to-1 risk to reward ratio. Be patient. Trends take time to develop, so give your trades some room to work. But don't hesitate to cut it if it breaks below the key support. To wrap it up, large cap earnings season doesn't need to be a momentum killer for our small cap strategy and sector. It's all about adapting your strategy. Stay patient, focus on high volume plays, and take advantage of this slower market to practice your trend trading skills. If you found this video helpful, give it a thumbs up and subscribe for more powerful education for your day trading. I post amazing educational videos all the time for day traders just like you, which go from scalping to full trend trading. And if you're ready to take your trading to the next level, I want to personally invite you to join my Pro Traders program. This exclusive membership gives you full access to the private Discord channel where I share daily the AI alerts, smart targets, institutional levels on your chart, and much more. You'll also get access to daily watch lists, the AI-powered scanners, live news broadcasts, the trade algos, alerts, real-time trade guidance, and one-on-one mentoring from me personally. And right now, I'm giving my YouTube subscribers an exclusive discount that you won't find anywhere else. So if you subscribe to this YouTube channel, you'll lock in an incredible deal. The link to claim your discount is below in the description below this video, and also I'll pin it in the comments section. So don't miss out on this very special deep discount offer. And thanks for hanging out with me for a few minutes today. And until next time, trade smart, stay focused, and trade with the institutions. And I'll see you in the next video.